Hey traders, welcome back. So on the theme of filters, so we're trying to reduce our losing trades and also put us in a position to make better winning trades ultimately. But the predominant thing is just to keep us out of trades that we know are going to cause us problems. Another method that we can use is to just use a moving average. Yes, it's very simple, but it's very effective because as we know, a moving average, if I get the drawing pen out here, it's just telling us it's basically an average of the price. It's very simply calculated. It's just based on the period you've got the moving average, and then obviously the longer the period, 100 period, you're going to get a smoother thing. This is a 100 period here, and then a shorter one you've got here. So it's a 20 period, I think. So how can we use that as a filter? Well, what we would do is we would say to ourselves, listen, if we're trading an extension of momentum strategy, in other words, pullbacks, reversions to mean that we're looking to further extend, those kind of things, then we can say to ourselves, listen, as long as price is below a certain moving average, then we want to get involved in that direction. For example, if price is below the 100 period, we want to stay short. Or if the 20 period is below the 100 period, we want to stay short. I'm sure some of you are going to be watching, going to go, that sounds absolute nonsense. And I understand exactly where you're coming from with that. But the point is, this is just a simple method to filter things. You would want to add an additional filter into that because you'd want to say, okay, I don't just want to be short all the time when it's below that. But what it means is it keeps you from getting involved in stuff you don't want to be involved in. For example, let's say this starts to drive down here. We're in the Euro US dollar here, by the way, guys, and this is a 5-minute chart of the Euro US dollar. Okay, so it pushes lower. The 20 period goes quite a big bit away from the 100 period, and I'm just eyeballing this. I'm not using MACD or anything like that. I'm just literally eyeballing on a chart. But what it means is it keeps you on the side of momentum potentially. Yes, you may get caught out in reversals from time to time, but assuming that you're in a trending environment, an extension environment, it's going to stop you trying to look for a long in this period here, when in reality you should be reserving your resources for the short because you're 20 periods way below the 100 period. You've got the criteria of a good drive lower. It keeps you in the mindset of just looking for one particular trade. Now, that's the reason why this is so powerful, because too often as traders we kind of say to ourselves, listen, I want to go long, I want to go short, I'm prepared to do both, and we end up getting mixed up and thinking for looking for two different things, looking for the long at the low, looking for the short on a pullback, whereas in reality, experience has taught me that it's best to stick to one thing. Now, whether that is waiting for the long, whether that is waiting for the short, there's no right or wrong, because as you can see, even with this, there's money to be made on both sides, but very rarely are you going to get both of them. So you're better off, instead of trying to catch two rabbits, who doesn't catch any rabbit, what's this phrase and saying? I don't know, there's a famous Chinese proverb, he who chases two rabbits won't catch any. What's that kind of thing? But you get the idea. If you're looking just for one thing only, then okay, you may miss it, but at least you're looking for that one thing in a ready to strike day. You're not looking for different types of patterns. So this kind of filter with using the moving averages keeps you on the side of whatever you're trying to do. Maybe you are looking for that first pullback, in which case you're looking to stay short, you're looking to wait. Maybe you've done analysis on this market and you've said, you know what, we're quite extended on the day, things are looking like they're coming to some support area. I want to look for the long, but I'm only going to look for longs when we are very extended and the 20 period is away from the 100. So you can flip it on its head. And I know that sounds a little bit like it's a cop out, it could go long, it could go short. But you can appreciate how we have to have the whole picture of our strategy and the way we approach trading for us to fit in. But it's just a very crude and simple way of fitting things in. And let's look at something else like a pound. Let's look at pound yen, GBP, JPY. Let's have a little look at that and look at that on a 5-minute. Again, this is the kind of thing we might say to ourselves, listen, this is an extension here. And let's look at it from both sides. Let's keep it fair now, guys, and let's look from both sides. Let's not cherry pick, because I hate cherry pick stuff. It's not the real world trading. Be warned of anyone who's cherry picking things. Okay, let's look at both things. So let's look at, we had this scenario, we saw this on the yen and we wanted to go short. Okay, we said we wanted to go short. How would we trade this? Well, we would say to ourselves, listen, we only want to go short when price is away, a significant portion away from the 100 period. Now, this is the 100 period moving average. So when are we going to go short? We're going to go short anywhere from kind of this range upwards here. We're probably looking at, we can basically draw like a line that channels that one period. And again, I know there's tools to do this, and I know that we can go as much depth as we want, but I'm a big fan of processing things like this, having a strict set in stone filter based on code, if you like, and then adding some discretion into it, because as traders, everything's black and white. So give yourself a little bit of structure, should I say, and then a little bit of leeway within that structure. So then we would say, okay, listen, that's when we're looking to get short. So we're getting short here, we're getting short here, we're getting short here, we're probably getting short here and getting stopped out, that kind of thing. Right, now let's flip it on its head. But what that does is that stops us from getting short too early. Whoops, the drawing pen's taking out the chart. There it is again. So it stops us getting involved too early. It stops us getting involved short when actually the short's not the greatest thing in the world on this one, is it? Because it's trending up and it's just grinding up. But it stops us getting involved with short too early, even on the wrong end of a move. So even though this is trending up and it's the wrong time to be short, it stops us getting short. Now let's flip it on its head and look at something that's far more profitable for us. Let's say we're looking to get long and we're looking to try and filter our long. If we're staying on the long side whenever the price is close to the moving average, in other words, it's pushed away from it and come back to it, but we still have the 20 above the 100 or whatever we want to use, it keeps us on the right side. All these levels here, our areas are a kind of zone where we want to get long, and eventually this is the one that's going to stop us out because the 20 crosses the 100. Okay, crude stuff, appreciate that, but the point is, you have to use the simplest things ever to give yourself the boundaries in trading, because trading, you can do whatever you want, however much size you want, whatever strategy you want, and sometimes it pays to give us boundaries, even if sometimes they're knocking out some good trades, just to keep us on the meat of the best trades. So that's an idea, using moving averages, whatever time frame, whatever period you want to use, and coming up with your own strategy of saying, listen, I only want to take trades when the moving average is doing this, or when price is X away from a moving average.